Welcome traders to our post-week market review. So jumping straight into things here, I want to go from where the market opened up, which is this candlestick here. If you remember, we marked in the supply and demand areas that we established last week, where we found price was at the most sort of fair value for retail traders. We saw the most volume within these areas. I will go ahead and show you if you did miss out on last week. So originally we measured sort of this move here and we established that the most volume was within this area, indicating to us that there was a lot of buy and sell orders, a lot of battling, as you can see, consolidation on the hourly time frame, meaning price was sort of moving like this on the lower time frames until we then saw a break. We then measured the move after this bearish move. We measured the move up until obviously this area, and we established that most volume was within this area. We established this in our post-week market review when volume and obviously the gold market was closed. So we then established that this is definitely going to be an area where we see price push from. As you can see, price did definitely push from. We originally opened up in a very strong bullish manner, breaking through this previous all-time high of 3,895, and then as you can see from there, price continued on bullish all the way up to a new all-time high of 4,060. Since then, we dropped back down and price came up to test that rough area once again. And then from there throughout the sort of late New York session, all the way up until the evening, closer to the Asian session on Thursday, we saw price completely plummet. And then from there, bullish momentum once again, lower time frames, higher highs, higher lows, and finishing at 4,012. So as you can see, this chart is very bare at the moment. So what I'm going to go ahead and do is I'm going to do what we did last week in our post-week market review, and just sort of measure this entire week of volume and just establish the rough area where we can see the most trades place. So as you can see, it is within this area here. So we're going to go ahead and grab our rectangle and sort of just mark in evenly either side of that. We will keep it in the green color that we marked in our other supply and demand areas, just to keep things clean. So we have that first level that we want to mark in. I'm also going to drag this volume oscillator, or sorry, not volume oscillator. It is a fixed range volume profile. Really cool tool built into TradingView. I use it from time to time, especially when the market is moving like this, just to get a rough idea and a better bias in terms of where the market might go. So what we're going to go ahead and do then, we've measured the entire market. Let's measure this bearish move here all the way up until market close. And we get the same sort of area, so indicating to us again that the most fair value and the most orders are within this level. What we'll go ahead and do as well is we will mark in, once we saw price come to this all-time high, we'll sort of mark in from here to here and just get a rough idea of where all the volume was. So you can see that we had a lot of volume here. That's a great indication. Actually, we're going to go ahead and mark that in. I'm going to mark that in with a horizontal line though. I'll put that in our white color just so it's a little bit easier to see, and then I will mark in the rough volume for this entire sort of lower time frame bullish push, again indicating to us that roughly around this level of 3,982.3, give or take, that is where the most volume is traded at. So now we've established a couple levels with our fixed volume range profile. We're going to go ahead and mark in our levels as we normally do. So let me just make sure this is in our white. So first level I want to mark in is obvious. Obviously this previous all-time high that we created on the start of a London session on Monday, which was 3,945. As you can see, price pushed above that level, then we came back down to test it as a resistance, indicating to us before we even saw any of this information over here, indicating to us that this is a nice psychological level to take into account. And then obviously, as you can see, as the market continued to play out, so we created our resistance, then we tested as support, and then tested as support. So indicating to us a nice little level there that is traded as both a support and a resistance level. Okay, then moving on up, we're going to go ahead and mark in the new all-time high, of course. We're always going to mark in the new all-time highs, especially if that's the most highest point of gold. And as you can see, price did actually test this level twice. Okay, then having another little look, we have sort of one more level that I'd like to mark in, and it's going to be this level here. As you can see, we do actually have this level here that we marked in at 4,000, which, if you remember, this was sort of the ceiling that we expected gold to come to. And it is very, very interesting because you can see that price completely pushed through that level. However, we did see a couple tests on this level, and you can then see price sort of reacting to this level as a resistance. So that 4,000 is going to be that sort of psychological key point of interest that a lot of people around the world are going to be like, oh god, that's over 4,000. Let's see what we can do here. So with that being said, that's going to be our points of interest marked in. I will delete the level of 4,000, but let's go ahead and get into what we could expect to see for the next week. So with current price action, with the current candlestick structure that we are seeing on the higher time frames, you can see that price is bullish. Obviously, the Thursday we saw a bearish push. We have in fact seen a bearish engulfing candlestick. So a bearish engulfing candlestick or a bearish engulfing pattern consists of three moves. So we obviously have this move here, we have this move here, and then we have this move here. So we like to call it our A, our B. So if I just do this for you, so we have our A, then we have our B candlestick, and then we have our C candlestick. So our A candlestick is just the start of the engulfing pattern. They can be bullish or they can be bearish. It depends how the market is moving. In this instance, it is bearish. So we have our initial candlestick, which is our A candlestick. We then have our B candlestick, which is actually the engulfing candlestick. And the reason why we call it an engulfing candlestick is because it engulfs all the data that you can see from this previous candlestick. So the candlestick is bigger than this one here. And then our C candlestick is technically our entry candlestick. So with that being said, and basing a trade on the daily time frame off of a candlestick pattern, which I don't recommend doing, but that does say to us that we could in fact see some bearish momentum or a bearish start to the week before we see price go ahead and test that previous all-time high or create a new one. So if I go ahead and delete these drawings for you, and we'll go back down to our hourly time frame and have a closer look. So with current price action that you see on the hour one, it makes sense if we see price sort of continue pushing from this level here. If we see price push from this level here and then sort of test maybe 4,036, or we go ahead and see price test that all-time high of 4,060 and break above it, or just sort of test it as a resistance. Obviously, there's going to be loads of possible scenarios that we see for gold. Gold could completely just sort of plummet from this level, coming back down to test this sort of key support area at around 3,945. I will say this, I believe the level of 3,945 is going to be sort of that pivotal point for gold where we for where we are right now. I think if we do see that level of 3,945 broken through, we will sort of see that big correction. As you can see on the dollar index as well, if I go to the daily time frames, you can see that the dollar index is sort of propping itself up for an enormous bullish push. And as you know, these are the bipolar opposites. And if we see sort of the dollar strengthen up, the gold will become weaker, and then vice versa. So at some point in the future, there is going to be a major correction for gold as the dollar index has propped itself up for a bullish move, but it's no telling when that will take place. So based on the current price action that we are seeing, I do believe that at the start of the week, we could potentially see some bullish momentum carrying price up to the level of 4,060. And then obviously this new all-time high will then determine whether price is going to continue bullish or we're going to see price test at that level as a resistance. And then that sort of be the main topside resistance for gold for the foreseeable future. Again, of course, like we just established on our daily time frame, this bearish engulfing pattern, not that it will probably stand. I've seen this happen many times before, and it doesn't really stand. It's no good just basing off your entire market bias off of a simple candlestick pattern. But I will say this. If we are to see bearish momentum, we will see price sort of test at this level as a resistance, drop below that 4,000 level. And like I said, that level of 4,000 is going to be that psychological level within traders' minds where they're going to think, okay, price is above 4,000, it's going to continue going. If price is below 4,000, price is bearish. And then you're going to see a lot of sellers enter the market and take short positions, catching that move on the downside. As a lot of economic traders will be looking at the news, will be performing technical analysis within the dollar index and understand that it is propping itself up for a nice bullish move, which will sort of deteriorate this this bullish momentum that we have seen on gold for the past few weeks, if not months. But with a bearish move, I think price will sort of test at this level. It will sort of drop down bearishly, and then we might see sort of this level here. Like I said, that level of 3,945 is going to be that main pivotal point. But if you can see where these levels are marked in, if you want to copy them over to your chart, so we have 3,943, we have 3,982, we have 3,400, and let's call that 6.5. We have obviously 36.64, and then obviously the recent all-time high. So if you want to put them into your chart now, by all means, be my guest, as these are the levels that I'm personally going to be looking at. Sort of if we see price trading above this level, I'm then going to be looking at that lower time frame, that lower level at 4,036. The reason why I call it a lower level is because these points of interest that we've marked in with a white rectangle, they're sort of just places where price is tested as resistance and support, or just resistance or just support. Obviously this level here was the overall volume. Once we saw the most volume, the area with the most volume, once we saw the all-time highs tested, and then obviously this green supply and demand area as we marked in previously here. So they're the levels that I'm going to be looking at. If price is above this level, I'm then looking for 4,036 to be tested. If price tests at this level as a resistance, I'm then going to be looking at this level to test as a support. If price breaks above that level, I'm then going to be looking at 4,036 to test as a support, and then obviously vice versa with these levels down here. So that's going to be our post-week market review. As always, I hope you've enjoyed. If you haven't already, join us, join our prop firm. We have really cool deals out at the moment. I think we are running a 35% discount offer on our 100k accounts and above. We also have a 25% discount on any account size below, so that's 50k, 25k, and your 10k accounts. So really good opportunity, built by traders, made for traders. We also have a fully detailed 10 module course inside of there as well. Also a full Discord channel where you can chat amongst other traders, and obviously with our support team and owners. But yeah, really good opportunity. We're still sort of slowly starting. We've made a couple payouts already, which is really exciting. We've had many traders pass, which is really cool as well. I definitely do think implementing that 10 module course has helped. But yeah, I'll wrap this up here. That's our post-week market review. Of course, I will do a start of week technical analysis write-up, and I'll also catch you in our midweek technical analysis video. Don't forget to like, comment, and subscribe, and I'll catch you in the next one. Peace.